Traders, welcome back to another price session trading lesson. We're going to discuss how price action moves and how to navigate the price chart while looking for high probability setups. We're looking at S&P 500 and futures. The time frame is 2000 tick chart, and the blue line I have on the chart is just a supportive indicator only, and it is a 21 bar exponential moving average. And we're going to start with the structure during the pre-market session because this is the price action you would see before the regular US stock market open. And as I can see, the structure is clearly a bullish channel. And just like we talked about during our last video, notice prices consolidated. A lot of bars stacked right next to each other, which is a congestion. Notice you want to fade the breakout. Prices broke the congestion. All the sellers got trapped, but we traded up into the congestion and prices continue working higher. Came back, tested the breakout area from the other side. The breakout area held. The resistance acted as a support alongside with the exponential moving average. Now, why am I talking about this? Is because we have a break and a new high of the uptrend, and you can see that you have a second entry long. And generally, when you have a break and a new extreme of a channel, which means that the trend line rule played out, you want to be a little bit careful going long or short after new extreme. You generally want to wait for the confirmation setup, high low or the lower high if you're selling. And notice after new extreme was formed, there was a push below EMA. If I'm looking for predicting to have a bearish channel to start, I would like to have reversal pattern, which would be a failed second entry long, which I don't have. In this instance, this is the highest high of this entire uptrend, and prices are pushing below EMA, which is already confirming the bearish momentum. And we only have the first attempt to go long, which means we have a lower high coming from this high, and there was never a failed second entry long reversal pattern, which is a shame, because had we had a nice failed second entry long somewhere around here, close to EMA, there would be reversal pattern, and that would identify to us that we can switch the momentum from bullish to bearish. However, market continue working lower, so naturally what I have to do, I'm going to connect the first few couple swings. I'm going to try to locate a channel, because in price session, even though I'm observing these naked candlesticks, they're always part of some channel, of some pattern. So my goal is to always select the proper channel, and the channels are not subjective. There's objective way how to look at them. Sometimes you may not see it at the very first glance. Sometimes it is very hard to identify the proper channel, but that doesn't mean that the channel is not there. So you have a bearish downtrend, which means I'm looking for high probability setups to sell. However, I cannot just sell anywhere on the chart. As you can see, prices are working lower. I don't know when exactly we're going to pull back to the EMA. I want to sell when the correction phase will end in a form of a high probability setup at the key entry point. Okay, so I can see that the prices are correcting to the key entry point, which is good. I want to see prices correcting to the key entry point, and I'm looking for second entry short, because right now I have the first entry short. We have a close outside, attempt to create new extreme, and we have a potentially second entry short at two key entry points. Well, let's say one, the EMA, we're closing outside the channel, so we expect to have a new extreme tested. However, notice the signal bar. The signal bar didn't close bearish. It's still quite bullish, which is weak bar for me to sell below, so I'm not interested. And the next setup I'm looking for is I see bad signal bar on a second entry short would be a lower high confirmation setup, and prices are correcting, and here we have a lower high because we have the second entry short here, and this is the lower high compared to the second entry short, which would be a confirmation setup. But notice the signal bar again really bad, so I don't want to take it. Okay, you have micro double top, and now we have new high here. First entry long, pullback, second entry long, failure. So another potentially high probability setup. And unfortunately, once again, the signal bar is not bearish, it's bullish, so I cannot sell just yet. Even though it worked for a scalp, that doesn't matter. I'm going to be patient because the signal bar really is bad, and I don't take the gamble just yet. So the bias of the market still remains bearish, but I can see that the prices are going sideways, and notice I'm going to locate my support and my resistance. Why am I doing this? Well, because EMA is flattening, and suddenly I have a lot of price swings just moving up and down, up and down. And notice what I have. I have very shortened channel, followed by a break and the new extreme. And notice I have a new low, first entry short, pullback, second entry short. So here we have the two-legged pullback, uptrend played out with the break and a new extreme. And going short here would be great had the signal bar been just slightly smaller. This is really big bar. You have to use limit order here. I can mark it as more aggressive. Mainly next time you see the setup, you would like to have it much smaller. but the limit order would never get filled and prices keep working lower. And now we have a lower high confirmation setup of the second entry short. Okay, but notice it's now in the middle of the trend range, and once the trend range is this tight, you really want to make sure you have enough room to get out and you're buying low or selling high. In this instance, selling high because we traded down into the trend range. So this is quite in the middle of no man's land. It's really tight range, so you don't have that much room. However, I will mark it more aggressive. Foundation wise, this is not a bad setup to take a chance because it is confirming the second entry short and you're coming off the highs. It just didn't form that well. The body is also not close to the EMA. Had the body been close to the EMA, I would really have liked it better so you have room to get out. You can see, unfortunately, would have ended up getting stopped out here and market continue working lower. And you can see the support keeps holding. Okay, so now prices are struggling to create new extreme of the downtrend. So what I have to do, I have to respect this bullish uptrend. I don't really want to go long just yet because we still had a bearish bias. So I'm just waiting. Okay. I don't want to sell. We have uptrend working higher. It is an inside bar and market continues working higher. Okay. And now we have first leg up, pull back, second leg up. And this uptrend played out with the break and a new extreme. But this low failed to reach the support. So we have some slight bullish imbalance. Normally you would expect for prices to go all the way down to here. The fact that each new low for the most part is higher is a little bit of worry. So I'm just going to be patient. I'm going to zoom back. What am I expecting? I'm expecting for prices to go back into this trend range because we traded down and this first massive lag needs to get new extreme. So the overall structure is still quite bearish because we had a very strong downtrend, a little bit of consolidation, two-legged pullback. We are overextending the two-legged pullback. However, let me see if I can get a failed second entry long below EMA. We have a new high, first entry long, pullback, second entry long, but we're above EMA. And the failed second entry long is above EMA, so I don't want to take it. And notice market is trending to the downside. However, I can't really touch it because the news are coming out. You can see this is why we have such a massive bars spike in volatility. And prices are on our way to create the new extreme for the downtrend. We're back into trend range. Okay, I'm going to draw the correction. And notice we have new low, first entry short. There is a, first entry short is right here, new low, first entry short, pull back, second entry short. But we are above the EMA and I cannot take it just yet. But notice, market likes to move in pairs of twos, first leg up, pull back, second leg up. So there is no bullish bias in this market. We started the session with the bearish downtrend like this that needs to get new extreme. If you go on a higher time frame, I recommend 10,000 tick chart. You would clearly see first leg down, a little bit of a consolidation like this. So you expect for prices to retest the new extreme for this first leg down. So I'm not thinking bullish. And notice what we have: new low, first entry short, second entry short, little tick higher, and now we have a lower high confirmation setup of the second entry short. And you're closing below EMA. All the bulls got trapped. The uptrend played out with the breaking new extreme. Great high probability setup. Strong tier 1 signal bar closing below EMA. There's even a potentially tier of a resistance. You can see bulls are really struggling to break higher. They're going to get trapped. And what is the setup you're expecting now? Well, new high, first entry long, pullback, second entry long, failure. But the signal bar is above EMA and is a bullish doji. I can't take it. Unfortunately, there's no way for us to enter. A market continues working lower. So as you can see, there's a reason to why I'm counting these entries. It's because the price action works in pairs of twos. And I'm looking for high probability setups in the form of a two-legged pullback. If market is trading to the downside, I'm looking for two-legged pullback to sell or fail two-legged pullback because you have a new high, first entry long, second entry long, failure. I'm counting for second entry long to fail because the bias is bearish. So I'm not looking for second entry long to go long. Okay, market keeps working lower. At first, I drew my channel like this. Give you a new low, first entry short. You have a second entry short. And also the main channel just created new extreme. So I gotta be careful selling, and we are at the low today important key level. However, notice we didn't even make it to the EMA and market continue working low. Okay, so this tells me there's additional channel because I can see I have a couple of confirmations at the top. You can see 3 swings allow me to identify the channel. I'm gonna copy it. you have a small break and new extreme. So all channels, as you're observing this, have new extreme. And notice, low of the day key level, high of the day key level. This is important because if a structure is hinting or giving me any signs of a trend range, marking my low of the day and high of the day is very important because there are going to be important areas prices will react to. And even though this structure at first glance may appear to a novice trader as bearish, it's not really the case because we have first leg down, pull back, pull back, second leg down. Notice we are not close enough to reaching the measured move, but there is a reason why market cannot go all the way down. This is because we were in the trend range. So we are breaking the trend range and we have a larger two-legged pullback. And you already know once you see two legs out of the trend range, you gotta be a little bit careful selling directly at these lows. So at this point, I'm pausing all my short setups. At the same time, I don't really want to go long just yet because the structure was really bearish. You don't know how many pushes lows they're going to be. You have a new low, first entry short, second entry short. No, there is no trigger below this bearish bar. So I cannot really treat it as a failed second entry short. Had there been trigger below this bar, trapping all the sellers, maybe, but there is no trigger below this bearish bar. Okay. You can see you have higher low here, but now you have a strong congestion. Multiple bars stacked right next to each other. I don't want to touch it. Okay, we'll break new extreme. I even redraw the channel like this, slightly wider channel. And notice important reaction to the low of the day kilo. Even though I have a new high, first entry long, second entry long, I cannot go long directly into this important low of the day. It acted as a support, and now prices are getting rejected once and getting rejected twice. I can only just a tad higher. You can see the important low of the day is indicating now reaction here, reaction here, reaction here. So I'm not looking to go long on a second entry long directly into breakout area. We would need to push above this first for me to start thinking going long. Okay, this is important because if you are below, you can't really go long. You can only go long if you push above the breakout area. And notice what you have. You have new low, first entry short, second entry short, and you have sort of like a one top, double top, triple top. So you have micro triple test and a second entry short. Very tempting setup, more advanced, but because the low of the day is holding so strongly and the breakout area is rejecting prices, advanced trader can't take a short here because the triple test and a second entry short, and market continues working lower. Notice prices are going sideways a lot, so this is very congested. I actually took this long here and I didn't really like looking to go long. I was looking for a lower high, but there was no trigger. So technically I should have went short here, but for whatever reason, I switched my bias and I ended this long and I ended up getting stopped out. So why did I take this trade? I don't really know. It was just a brain freeze on my part. So trading is very mental. I really was supposed to be patient here, especially once it is so congested. It doesn't happen often, but it happened here. I just took a trade and unfortunately I had a losing trade right here. So you can see sometimes it can happen. The market will just lure you in and market keeps working higher. But it's not a good setup. I don't want to mark it because you're really supposed to be patient. You know, two sideways. It's getting a little bit unclear. And this is where it's a lot of times easy to get chopped because the main channel has a break new extreme. So there is no bearish bias. But at the same time, it's too early to go long because you're just hovering around this key level. So the high probability setup is supposed to be under the right context at the key entry point and form correctly without congestion. So once it's unclear like this, you really have to be patient and you want to force it. Notice I have a first leg up, pull back, second leg up. But as the market keeps completely overshooting this and keeps working higher, I have to adapt. So I'm going to redraw the uptrend here, followed by a break and a new extreme. Okay, new high. So there is no way for me to go long. First entry long, second entry long, fire from EMA, I can't take it. After new high, we have a micro double top. We have visual two-legged pullback, potentially double trap. But we have micro double top. I need to reset the count. Also, we have a congestion. Okay, we're pushing below EMA. Notice what we have. New high, first entry long, pullback, second entry long, failure. Which, after you have a break and new extreme of the uptrend, is probably indicating the market may reverse. We can't really go long because the uptrend had a break and new extreme. Even if I draw a slightly wider channel like this, it still reached break and couple pushes to a new extreme. So this right here is a failed second entry long potential reversal pattern. But notice you're still quite part of this consolidation. There is still some sideways structure. I can mark it a little bit more aggressive because it is technically a reversal pattern, failed second entry long below EMA. EMA keeps rejecting prices. It's just not the greatest that you are still part of the congestion. You can see this is what can happen. Prices need to break out, pull back, test the congestion, and now finally the market is free and market can continue working lower. But decent setup, not bad at all. You're just a little bit more aggressive because you're still hovering around this consolidation. Hopefully you understand that you're following the trend line where you have a break, new extreme, and you have a failed second entry long, indicating that the market may reverse. Okay, prices are trending down, so naturally I need to identify the push down. Am I interested in selling? No, because we're far away from EMA. I never know when it's going to pull back. I can't really sell. Okay, and we reach new extreme even here. Okay. I can zoom back a little bit and reanalyze the structure again, because something happened here and we had the massive leg down, and I can see geometric formation of lower highs. What I can do, it doesn't really help me that much, but I can look for some bigger pattern. You can see quite a larger downtrend followed by a break and a new extreme. You don't really need this downtrend, but it can help you identify the fact that you can't really look to sell here. Because notice, every single time you have a little bit overextended push phase, you tend to have a stronger correction. Notice, push phase down, correction, push phase down. You don't want to be selling here, market may correct. Steep push phase down, notice not a single touch of the EMA. So you're definitely not expecting now to keep selling. It has a range-like feel. Notice, move down, move up, move down, move up, move down. Very range-like. You definitely are not thinking about potentially selling because all downtrends reach new extreme and it has too much of a range-like characteristic. And market keeps reversing. Okay, this is a good sign. Notice how far the market is retracing. So once I see market retracing so far up, that's confirming my bullish bias, because if the bias was a little bit more bearish, you would probably make a leg above EMA and then had some sort of consolidation. The fact that you're pushing so strongly and negating any bearish momentum is a good sign. Okay, we have micro double bottom. We're far away from EMA. I don't want to sell. Okay, we have new extreme. So I'm pausing my shorts. Okay, and this is interesting because notice what is happening. Prices came back and now I have triple test alongside with the EMA. That doesn't mean I want to go long just yet, but it's already starting to hint me something that since all downtrends have new extreme and we pushed above EMA so strongly, this is not end of the bullish momentum. Notice we have a lower high from the top and notice what is happening. As you're observing this price action to form, it is giving you information that the market is offering you probably a wider uptrend. So when I was watching this, I played the short and break in new high, but I saw triple test alongside with the EMA. So you have two key entry points holding, and then you see sellers getting trapped on the lower high, and then the market is reversing and EMA holding once here, twice here. So once you see this second entry long forming, this is where now you have to make a decision. Okay, there's something going on. Sellers really got trapped selling lower high directly into EMA above it, and notice how strong the signal bar is. If you're thinking if the market is bearish, the stronger the bar here is can tell you that it's most likely going to work higher, because you can't imagine failed second entry long. Every single time I'm thinking about, okay, do we have a wider channel? Think about how the failed second entry long would form, and here you really couldn't sell failed second entry long because you would need to push below EMA. Here it's clearly decisive bullish momentum, so this is a great high probability setup. I actually took this trade myself because now it's confirming the triple test, the EMA, and a great high probability setup. And notice market continues pushing to the upside. We have a little bit of overshoot, but the bias still remains bullish. Notice first leg, we have a second entry long, but the signal bar is bad. Notice the signal bar, bearish doji. I can't take it, so I need to wait for either double bar entry or high low. Okay, we don't get anything. And notice we have big bull bar Technically not double trap because double trap should close above the EMA, so we're still below, but already you can see still visual 2 legs. Okay, you're pushing above. Okay, good. So what are you expecting? What is the next setup you're expecting? High low confirmation setup of this visual 2-legged pullback. So notice if the trend is up and I have the context down right and I have the key entry point, I want to do this. I want to buy 2-legged pullback, second entry long, second entry long. The signal bar was bad, but we can see visual 2-legged pullback. We're below EMA. After we push above, high low would confirm the 2-legged pullback. So we have now high low, but notice how it's forming. This is what I call steep high low when it's closing too much on its high. It didn't trigger below bearish bar, it triggered below bullish bar, and you're closing quite high. You don't have that much room here. Once again, we have a couple of setups that are borderline being good, but they're more aggressive because a lot of times what happens here, here's the thing, the context here was so good because the uptrend needs to get new high according to trendline rule. You have the support here, the EMA keeps holding and the visual 2 legs down, so this time it worked. Problem is sometimes the context may be a little bit unclear and beginner traders may get chopped because you really want to see closing it a little bit lower and not so steep, not so close to these highs. There was strong momentum, so once again, more aggressive setup, definitely context-wise, perfect setup. Just a lot of times it happens, it just comes back, may form a first second entry short and then go higher, but either way, decent setup. Because the context here was so strong, that's why it worked. Okay, so we have new extreme, even for the wider channel, so I need to pause and notice 1, 2, 3, 4, 5, 6 bars. Notice how EMA is flattening, completely flat. We have something that looks as a congestion, and I don't want to end this. I'm being patient. Notice I'm going to expand the congestion. I'm not touching this. I have a break new high, so I can't go long. At the same time, there's no decisive push below EMA, so I can't sell. This is the area where I just have to wait this out, and this is a very similar area to what we had right here. So once again, very crucial area to not get chopped because uptrend has a break new high, downtrend has a break new low. It's too late to sell, but too early to go long. Same thing right here. It's too late to go long, but too early to sell. Once you see this, this is crucial area where you really have to be patient and let the price action do its thing, which is hard because this is hour-long price action. So you're not touching this. Okay. Okay, and finally market is breaking lower. So I'm gonna find a channel. Notice how nicely the prices are fitting inside the channel. Break new extreme. According to trendline rule, there is a brand new phase, which is a correction or reversal. We had a correction and eventually market is reversing. Great. Okay. Okay, and you have break a new extreme of the uptrend and you have first leg up. So what are you expecting? A second entry short. And notice the 2-legged pullback, the downtrend needs to get new extreme and you have new low, first entry short, pullback, second entry short, right at the EMA, while the downtrend needs to get new extreme, second entry short, high probability setup. Just like on the way down, you're counting for second entry, excuse me, on the way up, you're counting for second entry long. On the way down, you're counting for second entry short. This is where you sell. Market continues working low, but I have new low again. New low. It's a little bit too early for me to widen the channel. I need to keep an eye on first leg down, break second leg down. I'm not interested in selling. We're reaching the measured move. Okay. You have a second entry short, but the uptrend doesn't have new high. And since I have larger measured move reach and 2 legs down, I gotta be a little bit careful. The signal bar is not the best. There can be pushed to a new high. Not really great setup to go short just yet. Okay. But notice what happened. We have a first leg up, break second leg up. Uptrend correction created new extreme just like we had here. And notice the big bearish bar. Everybody who went long prematurely got trapped below EMA, and everybody who went short prematurely got trapped. So now you have a correction, new extreme, and you have massive tier 1 signal bar closing right below EMA. And now this can even confirm possible wider downtrend. Because remember, we talked about if you have a break in your extreme, you can't really take the next second entry. You want to wait for a lower high, high, low. Or in this case, double trap can act as a confirmation. So I don't really need to identify a channel like this because I can rely on the double trap. But this can already start tell you that you have so many pushes to a new extreme. Push here, push here, push here. And you now have a break new high, no reversal. EMA kept rejecting. This is a great double trap. The best setup. And market keeps working lower. Okay, you have a second entry short, but you're above EMA. You actually have some double top. If it was some clear triple test, maybe. Okay, you closed way down here and formed new extreme. Okay, you have a second entry short, but we just had a break new low, and the correction is not that strong. I'm not really a big fan, even though every single time you have such a clean sideways legs, you can trust it. I feel it's a little bit too early because you just had a break new low. Remember, if you want to sell, now you have a lower high confirmation of the second entry short, and EMA held once, EMA held twice. So this is where you can consider selling, because after new low you have a second entry short and lower high. I'm going to redraw the correction here. I'm not looking for reversal because we had quite a distinct downtrend. So even though we have first entry short, second entry short failure here, it feels a little bit too early because this was quite a substantial move down, only one close above EMA. Okay, but market keeps trending to the upside. So you have a break new extreme, no clear setup. We're pushing lower. Can I get a failed second entry long? First entry long, and I can't get a failed second entry long. Okay, so this is odd. We didn't even manage to push lower. We're back above EMA. So there's obvious another big bar, high low. So something is changing. I can see that we have a spike. So probably there's a spike in a channel now. So you can see if you're just being patient and following the price action, you can start to identify the bullish momentum. Normally, if the bearish momentum is going to continue, you're going to have some failed second entry long below EMA. It didn't happen. You're back above EMA, new low micro double bottom, first entry short, pullback, second entry short, failure, failed second entry short. At this point, you know that the market is reversing bullish. You need to get new extreme. All the sellers above EMA are going to get trapped, and market continue working higher into the close. So the first part of the day was a little bit difficult, or let's say not that easy, while the second part of the day, the price action was fairly simple. You can see uptrend, two-legged pullbacks, break new high, downtrend, two-legged pullbacks on the way down, break new low, and another reversal. And you have to be careful not getting chopped like me today, spontaneously taking a long here and taking any setup here. This is generally when you break new extreme and the market is just deciding, and the market cycle is going to shift from the trend range to eventually a brand new trend. But I managed to get a nice trade right here and get a massive runner trailing it all the way to here. And other than that, you have to be careful around the news, but it's pretty much it. So I hope you had a great trading day. I'm going to wrap it up. I'm going to talk to you next time. Take care, everybody.